Joining us here at Post 9 today, Webull CEO Anthony Denier is with us. It's great to have you. Welcome.
Thanks, Carl.
I guess it kind of points to exactly the mindset right now is what is cash's value, right? What led you to this particular product?
Well, over the course of 2022 and the first quarter of 23, we've been seeing retail investors with a flight to safety. And that safety, whether it involves fixed income markets, cash, or index-based ETFs, they're not actively involved in single stocks. And single stocks is what makes a self-directed platform like Webull profitable. So we go to where the customers want to be. And right now, that's in uninvested cash. They're looking for returns. And instead of seeing that uninvested cash leave our platform, going to the local banks, going to even CDs at their local banks, we want to make sure our customers feel that they have a place at Webull to make at least some returns on their cash.
Do you have to make part of the marketing the assurance of what's protected?
Of course, especially now, right? More than ever. So we are a regulated U.S. broker-dealer, SIPC insurance, $500,000, 250 of that in cash, fully insured.
I mean, part of you thinks, all right, this is not a surprise, but does it mark what will likely be a pendulum shift back to, as you say, single tickers? Is that likely? I mean, is there more runway here?
I think the retail investor is waiting for a little more guidance from the Fed. As soon as we have that understanding of where interest rates, where inflation is going to go, and it seems like 2023 could be that year, we're going to see safety be the call for retail investors.
But if you're switching into money market funds, how do you make money?
Well,
you, as a platform.
Well, that's just it.
Yeah.
We're not. Right? So as a self-directed zero-commission platform, right, I wrote an open letter in 2019 when I got asked every single day, how do you make money without charging commissions? It's very simple, 4 ways. Payment for order flow. Now, we don't have time to talk about that in this segment. Fully paid stock lending. Uninvested cash, interest that we earn, and margin loans. Now, we took away commission, so we're left with those 4. We're now taking away that NII, that net interest income that broker-dealers normally earn on uninvested cash in customers' brokerage accounts. We're giving that back to the customer. This is, in my opinion, this is the next generation of zero commission. This is zero commission version 2, where broker-dealers are going to have to take a revenue hit. Margins are going to continue to compress for retail broker-dealers to make sure that they stop the exit and the flight of customer cash to different forms of making money.
How much are trading volumes down?
Well, Webull's fortunate. We have a much more active trader base than most of our competitors, but through 2022, we saw volumes down a little less than 10%, a lot better than our competition, and 2023 is looking the same. Our customer acquisition costs are going through the roof, and our customer retention is getting more difficult every day. So this availability for our customers to do absolutely nothing behind no paywalls, no minimum deposit amounts to earn a sizable interest on uninvested cash is a way for our customers to feel safe holding their money, feel like they're getting some sort of money working for them in their brokerage account.
Do you think individual name retail activity comes back stronger in a huge bull market or in a real bear downturn from here?
I think so. Webull's unique in the fact that we allow our customers to short stocks on our platform if they qualify, right? You have to have $2,500. This is there's Fed rules. I think we saw the run of customers trying to play the downside with the options market, with the inverse ETFs, and with short selling, right? Hard to borrows have gotten very expensive for short sellers. I think retail investors, single stock investing is going to wait till that next bull run.